Hello, I'm Molly, a licensed insolvency practitioner at Parker Walsh, and I'm going to be discussing dissolution or strike off and looking at it as one of the cheaper options available in closing your limited company down. So with dissolution, yes, it is a cheap option, but we need to consider other factors as well. So what is dissolution? What is strike off? So essentially it's a procedure that the directors can take to close their limited company down when that limited company is no longer needed. It's typically used for companies that were set up and never traded, so they've been dormant, and in which case this procedure is actually quite useful. It's not applicable for those that have a trading company where there's creditors, bounce back loan, HMRC, or maybe owed VAT pay as you earn. Or similarly, if there's assets in the limited company, say there's cash at bank or property, it's not right for you then. You do have to look at alternatives such as liquidation. But if dissolution doesn't does apply to the company. So check out the criteria. It's detailed on our website or on the government website, gov.uk. If you go to those websites, it will tell you the criteria there. And if the company meets the criteria, then yes, it is the cheaper option. You only have to pay the filing fee. But it's very much a procedure that the directors have to do themselves. It's not something that I'd be able to help them with. So it's very much that the directors have to make sure that they're doing it correctly. And it does take quite a while. It's a matter of months rather than liquidation, which just takes a matter of weeks. So it's a lengthy procedure, but it is the cheaper one. Now, what you also need to take into consideration with dissolution is if anything goes wrong or you don't meet the criteria and it gets dissolved anyway, and we have to reinstate the company, which can be very costly and involves the courts. That can come back on you as a director. So although you might be attracted by the price, and I get that, just make sure it's the right procedure for you and that you're doing it correctly. Because sometimes spending a little bit more money, putting it into liquidation so that someone like myself can do the liquidation for you, takes the risk away from the director so that it's not reinstated later on, and then the directors would be looked into as to why they dissolved it when they didn't meet the criteria, etc. So liquidation, although it's more expensive than dissolution, it does have its benefits. It's wound down properly by a professional like myself. It's quicker. We can get it into liquidation in about 3-4 weeks, realistically. And we can deal with the assets and we can deal with the creditors. And it also allows employees to claim from the redundancy payment service for what they're owed, which you don't get with a dissolution. You may also be looking at dissolution compared to a members voluntary liquidation, which is a solvent liquidation, and in which case I would speak to your accountant to make sure that dissolution is the best way, because I don't think that's going to be the most tax efficient way to close your limited company down. You might need a members voluntary liquidation. So as I've said, it is the cheaper option. There's no getting around that yet. It is cheap, but it's lengthy. There's personal risk to the directors. You have to do it yourself, and you may not even, the company might not even meet the criteria, so you can't really do it anyway. So it could be a headache that you don't particularly want. But if you're unsure or you'd like me to have a look at your company and see which is the right one, just let me know, and I'll give you, the open, honest advice of, yep, you do meet the criteria of a dissolution and it's cheaper, go with that. Or I might just let you know that it's not the best reason because of whatever reasons that apply to your limited company, and then you can make an educated decision. Okay, I hope that's helped. Thank you.